Nowadays, buying a single-family home is completely unrealistic for the majority of people. Like, are you telling me most families can cough up a massive down payment, chain themselves to a 30-year note, then spend decades shoveling cash into interest, property taxes, HOA fees, and surprise maintenance just to keep a roof from leaking and an insurer from ghosting them? Be serious. But you know what isn't unrealistic to be bought, at least for a certain group of companies? Your future. In 2025, the American dream is being bought, packaged, indexed, and traded by a firm most people couldn't explain in one sentence: BlackRock. The name sounds like a fortress carved into a mountain. And this isn't fantasy. It's the new reality of American housing and everything connected to it. Mortgages, utilities, data centers, logistics, even the boardrooms that decide how much your rent and insurance cost. While you've been working, saving, dreaming of that perfect home, BlackRock has been accumulating something even more powerful than houses: the claims on houses, mortgage bonds, REIT shares, corporate votes, and infrastructure stakes that set the rules of the game. They're not knocking on your door with a cash offer. They're upstream, where the money originates and the policies are written. Before we dive in, let's clear one huge point so you don't get embarrassed at dinner. BlackRock is not the private equity firm that went on a single-family buying spree after 2012. That was mostly Blackstone and other PE outfits. BlackRock itself says it does not buy individual houses. It invests for clients across real estate securities and mortgage markets, and it often ends up a top shareholder in the companies that do buy those houses. That distinction matters, yet the outcome for regular buyers can feel the same. When the world's biggest asset manager holds the money pipes, it shapes the whole neighborhood. So sit back and get ready to understand how BlackRock's index funds, mortgage holdings, and infrastructure bets can touch your rent, your utility bill, and your closing table, and why 2026 may be a tipping point if the wrong shocks hit at the same time. Welcome to House Crisis. Let's get into it. 10. The Phoenix Passive Giant Phenomenon. Phoenix looks like a classic Sunbelt success story: master planned suburbs, endless cul-de-sacs, and freshly flipped stucco. But the real story isn't only about who owns the houses. It's about who owns the landlords and the mortgage flows behind those houses. You'll see for rent signs from the big single-family REITs, Invitation Homes, American Homes for Rent, and others. Pull the filings and you'll notice familiar names high on the shareholder list: BlackRock and Vanguard, via index funds that millions of Americans own in their 401ks. In recent years, BlackRock has been among the largest shareholders of Invitation Homes, at one point reporting an 8 to 10% stake through various funds. That's not a headline-grabbing deed filing, it's the quiet gravity of passive ownership. And it goes deeper. BlackRock's iShares MBS ETF and sister funds channel oceans of savings into mortgage-backed securities, the bonds that finance home loans. When you buy the ETF, you're effectively helping fund the same mortgage machinery that sets your neighbor's payment and the price you'll face when you try to bid. That's influence without a moving truck. 9. The Southeast Squeeze, Index Edition. Atlanta, Charlotte, Raleigh, Nashville, the Sunbelt's affordable metros. As institutional landlords scaled up, these areas saw rents and entry prices move faster than local wages. Again, don't picture BlackRock buying the cul-de-sac one house at a time. Picture a network of public REITs and bond markets fed by index money. BlackRock's funds are often top holders of logistics REITs, apartment REITs, and SFR REITs, not because a manager picked them, but because the index demands them. The result? A steady bid for landlord balance sheets and steady pressure on would-be first-time buyers competing with professionally financed operators. Is that evil? No, it's plumbing. But when the pipes always flow towards institutional landlords, neighborhoods feel it. 8. The warehouse wars, but from the shareholder box. Every online order you place marches through a logistics empire. The biggest player, Prologis, has become the landlord of the supply chain. And who sits among the largest shareholders of Prologis across index products? BlackRock. Recent tallies show BlackRock's funds owning roughly a 10% stake of Prologis, second only to Vanguard. You're seeing the pattern. They don't need the deed to your local fulfillment center to influence rents and land values. Owning a double-digit stake in the warehouse giant is plenty. And now, BlackRock has gone even deeper into hard assets. In 2024, it agreed to acquire Global Infrastructure Partners, an infrastructure titan with investments stretching from Cyrus-1 data centers to major airports and ports. That folds the pipes of the physical economy into BlackRock's reach. Energy, water, logistics, digital backbones. Your neighborhood's shipments, flights, and server racks financed and influenced from a single platform. 7. The apartment algorithm. Think apartments are immune? Pull ownership tables for the big apartment REITs, Avalon Bay, Equity Residential, Camden, and more, and you'll find BlackRock on the cap table through its index funds. No, BlackRock isn't the on-site manager asking for your rent, but when the big three, BlackRock, Vanguard, and State Street, collectively hold near-permanent high single-digit stakes across much of the S&P 500, their proxy votes and capital costs frame what's possible. Upgrade budgets, rent escalators, how aggressively to expand. Academic and legal research has been ringing this bell for years. Passive ownership concentrates voting power, and voting power shapes strategy. 6. Hotels, points, and the price of a night. Travel rebounds, balance sheets heal. What happens to nightly rates when your index fund is a core shareholder of the hotel giants and the REITs that own the real estate underneath? The pressure to optimize revenue per available room, or RPAR, doesn't come from a mustache-twirling villain. It comes from a fiduciary incentive scaled across trillions of dollars. In passive land, just track the index and maximize long-run value, rhyme until the guest pays $60 for parking and housekeeping becomes on request. 5. Office chess. CRE meets the index. Work from home rattled offices, especially in San Francisco and parts of LA. Vacancy stayed stubbornly high. But inside the capital stack, 2026 is a refinancing wall for many commercial mortgages. Why does this matter to your house? Because when banks and bond buyers are nursing losses in office towers, they get stingier with all real estate credit. Construction loans, bridge financing, and yes, jumbo mortgages. When liquidity tightens, appraisals sag, and the move-up ladder loses rungs. The dominoes don't ask whether you're a homeowner or a landlord before they fall. Meanwhile, BlackRock's size means it's entangled with both sides of the trade, CRE debt investors and equity owners, and their votes matter when REITs decide to sell, recap, or wait. That's subtle power most people never see until a deal dies at the closing table. 4. The manufactured housing pinch. Mobile home parks used to be the last redoubt of affordability. Today, big manufactured housing REITs own community after community, and BlackRock's funds often sit near the top of their shareholder register. Here's the harsh reality. A manufactured home may be owned, but the land is rented. Move the home? It's expensive or impossible. That gives lot rent inflation extraordinary leverage. Passive funds didn't invent that model. They amplified it, providing a constant bid under the landlords that run it. 3. The AI-powered data center landlord. Your cloud life has a street address, the data center. And after the GIP acquisition, BlackRock isn't just a shareholder. It's a platform investor in digital infrastructure with partners like Cyrus-1 and Tower Networks. In 2024, BlackRock, GIP, Microsoft, and MGX even rolled out a $30 billion AI data center investment partnership. Data centers chew electricity like small cities. They need land, substations, water rights, tax abatements, and they compete with residential grids when the switch flips. If you think your utility bill exists in a separate universe from global asset management, think again. 2. Your 401k, their votes, the quiet loop. Here's the uncomfortable loop. It's your money. Teachers, firefighters, nurses, engineers, your pensions and 401ks pour into index funds. Those funds buy shares in landlords, builders, utilities, and insurers. Then, the fund manager, often BlackRock, votes your shares on corporate policies that affect your rent, your premiums, your job. The big three cast millions of proxy votes a year, shaping pay packages, M&A, and strategic priorities for companies that set the cost of living. BlackRock now even offers voting choice options because the political heat over proxy power got intense. But the scale remains staggering. Near universal ownership across corporate America means the same few stewards sit in nearly every boardroom every season. It's not a conspiracy, it's the math of trillions. As of 2025, BlackRock's AUM is in the $12+ trillion neighborhood. When a holder that big leans, even slightly, boards listen. Markets move, and neighborhoods feel it. 1. The utility switch and the power behind it. You want to talk about owning America? Forget the cul-de-sac. Look at the power switch. In April 2025, federal regulators renewed BlackRock's permission to own significant stakes in U.S. utilities, up to 20% of voting securities at the holding company level, subject to limits per fund. Why does that matter? Because whoever finances and votes the grid decides which plants get built, how fast renewables connect, and what rates you pay for electricity when the next heat wave hits. In an era where data centers and EVs are pushing load growth for the first time in decades, that kind of stake isn't abstract. It's policy with a dividend yield. Bought half of America? Not literally, but functionally? No, BlackRock has not literally bought half of America. That line is a provocation, a wake-up slap. What has happened is more subtle and arguably more powerful. The financialization of the American home, the American grid, the American warehouse, and the American workplace through indexes, ETFs, private credit, infrastructure funds, and the proxy votes that steer it all. A few more pieces of the puzzle. BlackRock plus GIP stitched together one of the world's largest infrastructure platforms. Airports, ports, data centers, energy, water. Real-world bottlenecks now roll up into a single global allocator with a multi-decade horizon. Insurance and utilities are converging issues. As climate losses rise, underwriters retreat or reprice. Local housing markets seize up, and utilities scramble for capital to harden the grid. BlackRock's role as lender, shareholder, and utility stakeholder gives it leverage across all three. SEC and stewardship pressure keep evolving. In early 2025, new guidance tightened rules around how big managers engage with companies, aimed directly at firms like BlackRock and Vanguard. Translation: even the referees think the stewards wield unusual power. So, what do you do with this information? Your playbook, so you don't get steamrolled. 1. Understand the upstream reality. If you're bidding on a home, the true counterparty isn't just a seller. It's the cost of capital set by bond markets and mortgage ETFs. That's where BlackRock lives. Track mortgage rates and MBS spreads like your life depends on them, because in this market, it does. 2. Read who votes your shares. If your 401k sits in broad iShares index funds, look into BlackRock voting choice. Decide whether you want the default policy, a third-party proxy stance, or something else. If you don't choose, someone else votes your economic voice. 3. Price the full cost of ownership. Don't just model principal and interest. Model insurance availability, realistic premiums, HOA and condo reserves, and utility rate risk. Data center load booms can raise local rates. Buy the monthly you can't lose with a single surprise bill. And yes, ask your agent for quotes before you fall in love with a house. 4. If you're a renter, treat your lease like a spreadsheet. Ask who owns the building or park, whether it's a REIT, and what their 10K says about rent escalators and CapEx. It's not nosy, it's survival. 5. Push back locally where it matters. Zoning reform, missing middle housing, faster permits for supply that actually cuts prices. These aren't Twitter fights, they're how you reduce the choke points that let capital capture whole neighborhoods. The bottom line? BlackRock didn't sneak down your street with a briefcase of cash and steal your brownstone. They did something smarter. They built the rails your mortgage rides on, the funds your landlord taps, the grid your AC needs, and the boardroom where maximized value becomes your rent increase. Is that illegal? No. It's the logical endpoint of a system that outsourced its future to indexes. When one steward manages double-digit trillions, buys entire asset classes, not addresses, and boats shares across most of corporate America, ownership becomes a matter of function, not face. You may not see their logo on a for sale sign, but you'll feel their hand in the appraisal, the premium, the HOA letter, the rate case, or the proxy ballot. So, did BlackRock just buy half of America? Not parcel by parcel, but piece by piece. Mortgages, REITs, utilities, data centers, ports, airports, and the votes that steer them, they've acquired a claim on how America works. And in a world where control beats title, that might be the bigger prize. Have you seen this where you live? Landlords consolidating, insurers pulling out, utilities hiking rates, offers collapsing because a binder couldn't be written? Drop your story below. Your experience is the canary in the coal mine. Because the American dream isn't just a house anymore. It's a system. And if you don't understand who runs it, you don't get to own it.